Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Interesting day of trade coming up. The global cues are a bit mixed. Domestically, of course, you have the GST benefits on one hand, as in HDFC Bank's a minor disappointment. So market will react to that. Let's see how things shape out from here. SGX Nifty indicating we'll have a flat start. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning. Ashwani, how to approach a market on a day like today when the market will be reacting to so many news pieces?
Well, very simple. First of all, good morning. If HDFC Bank takes Bank Nifty back to 26,700, we go ahead and buy. If GST takes us above 11,050, 60, we sell. This market is not breaking out. It's not going anywhere in a hurry. It's going to remain range bound, and that is what we play for unless proven otherwise. So let's hope HDFC Bank opens down 4% and it gives us an opportunity to buy. And if not, then maybe something opens higher and takes the market higher. So that way, in the middle of the range, there is no opportunity, at least on the indices. But every other day we get some event which takes us either below the range or above the range. And that way, people who are expecting expansion tend to get trapped.
Point taken. Sudarshan, good morning to you as well. What would be a positional trade on the Nifty or the Nifty Bank now?
Yeah, good morning, Lata. Well, Monday was supposed to be a very good day. There was a trust vote which gave the sense that in 2019 the NDA will not be falling short of allies here or there. But and the GST cuts tell us we are in a buoyant economy. But all of this is falling flat if the SGX is to be believed. And we will stay in the middle of a trading range in the Nifty. There is no trade inside this range. But the bigger picture is, what is the sense? Are we going to break on the upside or are we going to break on the downside below 10,930? And that sense is that if nothing is pushing this market up, then it's a matter of time before we slide down. Now a bearish position is taken below 10,930, but it's now opens up.
Okay. Mitesh Thakkar is also here with us. Mitesh, would you concur that this is a trading range that we are in, and through the course of expiry week, we might be in this range?
Good morning, Sonia. I think we have a very clear, fine range. We have had two intraday pivots at highs of around 11,070, two intraday pivots at lows of 10,940. So in that sense, the immediate boundaries are well defined. So yes, we are in a range. I suspect that eventually as we head towards the expiry, I think we might actually see a breakout or a breakdown happening. For the timing, I think it's clearly a stock-specific market with these ranges in mind. Similarly, on the Bank Nifty, I have pivots of 27,150 and 26,600. So I think, I would agree with Ashwani on that point that if we get around 26,700 or levels around that, I think that would be a good buying opportunity. And broadly, I think for the next 2-3 sessions, yes, the range could remain. But my sense is that maybe on Wednesday or Thursday, we might be closer to a breakout or a breakdown.
Okay, closer to breakout or breakdown, we'll find out. So since it's going to be about individual stocks, Ashwani, what's on your list?
Well, Raymond is a sell with a stop of 805, target of 780. UBL is a sell with a stop of 1090, target of 1030. Indian Bank is a sell with a stop of 305, target of 290. And Hexaware is a buy with a stop of 498, target of 515. And HCL Tech is a buy with a stop of 994, target of 1020.
Fair enough. Sudarshan, what would your choice of stocks be?
Well, it will be mid caps because the large cap Nifty is doing nothing. We'll start with Berger Paints, anticipating that some gains may come to that stock. The chart suggests that gains could come easily. So Berger Paints is a buying opportunity. So is Dabur. Dabur is at the top of its rally. After a consolidation, it could break out. These are, minor intraday opportunities. But Dabur is still a buy. The better buying opportunity is coming in IGL, Indraprasth Gas. And in Delhi, I'm a consumer of that. There was a mini bear market, almost 30% decline from the highs. That bear market is coming to an end in IGL. So there's an intraday trade which we are discussing, and there is also a positional trade in IGL to buy it. So that's three buying ideas. Z is a short sell. See the charts. It cracks every day, breaks support levels, nothing is holding it. So that's a short sell probably for a long time. And Capital First, similar chart, breaks every single support level consistently. 2 short sells and 3 buys.
Okay. Sudarshan, I actually expected Bata in your list. It has put its best foot forward when it comes to results.
Absolutely. But my problem was we do not know where it will open and whether there will be any gains after it opens. But I hope investors have Bata in their portfolio anyway.
Okay, and Bata shoes in their closet. Well, Mitesh, what about you? What are the stocks that you're looking at this morning?
So I have 3 buys to 2 sells. DCB Bank, I think some negative signals continue on the chart. So sell with a stop at 164.5. Look for targets of 152. Hero Motors has broken a very key support of 15.20. I think that's a sell with a stop just above 34.20. Look for declines to about levels of 32.90. Bata features on my list as well. The indicator setup is quite positive. In fact, I would want to see the stock open with some kind of a gap up. Once it breaks this levels of 851, 852, buy with a stop at 838. Look for an immediate target of 885. A buy on LIC Housing Finance with a stop at 506 for targets of 545, and I have a buy on Sun Pharma where the intraday charts are positive. So that's a buy with a stop at 551 for targets of 580.
Okay, Ashwani, you referred to HDFC Bank for the Bank Nifty trade, but for HDFC Bank itself, what's the trade?
See, again, you know, these sort of, in case you start getting a 3-4% type decline, large investors will come in because I don't think 1 quarter really makes that sort of a difference. But it'll be important for the Bank Nifty if HDFC Bank comes down to maybe say 2140, 2160, it should find buying around those levels. So any sort of gap down, even on HDFC Bank, should be bought.
Okay, we'll come back to you guys for more stock talk. But in the meantime, let's talk about that big acquisition that took place over the weekend. UPL announced its $4.2 billion acquisition of Arista Life Sciences. With this, it's now become the 5th largest agrochemical company in the world. My colleague Nimesha caught up with Jay Shroff, the group CEO, to find out the finer details of this deal and why UPL is paying such a big premium for it when compared to the company's past acquisitions. Take a look.
It looks like a premium, but actually, in fact, when you look at the complementarity of both the businesses, the synergies which we have, the distribution leverage which we will get because of our size, it is well in line with what we have paid in the past. In fact, I believe it's even lower if you look at the optimistic view. Even in the worst case scenario, we had our consultants review all our projections. Our partners at IA and TPG both also reviewed our projections, and I think we halved that, and then we are talking about numbers. So I believe that this deal for UPL shareholders is fantastic. Okay. I think as time goes on and they understand better the details of the complementarity of the business and how much we'll be able to benefit and how much leverage we'll be able to get on the ground with a bigger size business in the US, Brazil, South America, Europe, Africa, East Europe, which are all growing markets. Emerging markets will have a tremendous strength. Even our product portfolio is completely complementary. Sure. We have very little product overlaps. So that also gives us a complete portfolio. We'll have one of the largest portfolios of any company in the industry worldwide, even companies bigger than us. We'll have a much better portfolio. The biological solutions business of Arista is fantastic. The world is talking about food safety, etc. And this whole portfolio is going to continue to grow. UPL has launched some businesses in biosolutions. We have our whole drought climate smart technologies, and all that with size, we will be able to roll out our projects much faster.
Okay. I'll ask you about the product synergies and the geographical synergies. But first, which probably was a key discussion point within the analysts as well yesterday on the call, was a $450 million EBITDA that Arista reported this year. Given the lumpy style of the businesses of Arista for the last 4 years, there was a bit of doubt on the $450 million run rate which Arista is going to deliver. Are you confident that $450 million and upside is possible in 19 and 20 from Arista?
I think that it should be better than that.
Okay.
I am confident that from whatever we have seen, markets are improving. You know, Arista went through a merger of 3 companies. They bought Chemtura, they bought Agrify. All that integration has just happened. They put it all together, and we are buying it just at the right time, where all this is all the benefits of all the integration which they have done on their side, and they are a manufacturing-led company. UPL is a strong manufacturing company. That's our core competence. That's also completely complementary. We think we will be able to get a huge benefit out of that.
Okay, if you can now explain to us the synergies that you're talking about, because in the press release you've said close to $200 million of EBITDA synergy that you're going to gain in 2020. If you can just break it up in terms of product, in terms of geographies, how is it going to benefit you?
So that is really optimizing synergies. We not even talked about sales synergies, but if you look at our businesses, it's completely complementary. So if you look at their focus in Brazil, they are on fruit trees, wines. We are on row crops, cotton, soybean, corn. So it's completely complementary. Our portfolio exists, but we don't sell to those customers. They don't sell so much in the soybean cotton area. So I think that's completely complementary. In markets like Chile, we are non-existent. They are market leaders. So our whole portfolio, which we have registered, we will market through that. We have very little presence in East Europe, Russia. They are very strong there. This gives us completely... and these are high growth markets. Africa, high growth market, they are very strong. They're the leader in Africa. UPL has a small presence. This will give us a huge jump. So other than the cost optimization and rationalization synergies, we think the sales synergies are even much more, which we really haven't talked about to our analyst either.
Okay. What about the geographical synergies? Because I got a brief idea about a few countries where you all are not there, which will get an access to. But you all are there in LATAM, you all are there in a lot of the other overseas markets as well. How much of that is going to be synergized and how much there is an overlap as far as geographical presence is concerned?
So Arista has been with the Japanese parentage. They have a lot of niche products for niche crops. UPL is more in the large crops. So this whole portfolio of theirs, which brings us into fruits, vegetable markets, and that is completely complementary. And we have a portfolio which can sell, but we've never put any effort. Now with their sales team and their access to all these customers, we can sell that. In many other markets, if you look at it, they have a fantastic portfolio of biological solutions with our products, and theirs is completely complementary. And we believe that is, we've not been able to really say exactly, but that really makes, that's excited UPL team the most. If you talking to my guys, they're really excited. Also, they have a portfolio of patented products. We have our portfolio. Combining these products to give more complete solutions will give us a huge advantage in markets, and particularly to give farmers more complete solutions.
Okay, therefore, F&O stocks very important. Chandan Taparia of Motilal Oswal with us. Good morning, Chandan. What are you trading today?
Yes, very good morning. First of all, talking about the Nifty index, it is up by around 4% in this entire series. Started its journey from 10,600 and hovering near to 11,000 zone. In last 8 trading sessions, the index has been consolidating between 10,923 to 11,078 kind of level. So it got stuck in a range while put-call ratio is continuously moving and near to historical high of 1.71 level. On last trading session, we have seen fresh put writing at 11,000, but at the same time, call writing is also intact at 11,000 and 11,100 strike. So entire scenario indicates that market is again likely to consolidate with multiple support of 10,929 and up move towards 11,080 kind of level. Now looking at the stock wise, what I believe in the entire series, only Nifty and Bank Nifty are up while many mid-cap stocks are down. So outperformer are likely to be outperformer, or in fact some short covering could be seen towards the expiry, as huge shorts are there and covering might be visible as coal unwinding started to happen in most of these counter. So selective heavyweights are likely to outperform to keep the market or cheer the market to 11,000 plus kind of zone. So first that is buy on Reliance Industry. We have seen the strong momentum in this counter. It is up by around 19 to 20% in the entire series and continuously making higher tops, higher bottom formation. 2 days back, it has given a fresh breakout from its swollen flag pattern. Coal unwinding started to see at all immediate strike. Fresh put writing is visible at 1100 and 1080 strike. So which is giving the scope for further up move in the counter. So we are recommending to buy with a stop loss of 1108 and expecting it to move to us 1160 to 1170 kind of level. Second trade is buy on Jubilant Food. On last trading session, we have seen a strong consolidation price volume breakout on the counter. It has managed to surpass its immediate hurdle of 1450 zone and fresh built up, and the momentum could take it to higher level. So previous resistance of 1450 now could act as a support. So thus recommending to buy with a stop loss of 1450 and expecting it to go towards 1530 to 1540 kind of level. Third trade is buy on Infosys. We have seen the strong breakout in CNX IT index, and CNX IT has given the strong daily close on last trading session. Most of the IT stocks are likely to do well, especially if I'm talking about the heavyweights counter. So Infosys is a stronger counter, continuously respecting to its rising support trend line. Longs are intact, fresh put writing is intact. So this counter has potential to move towards 1398 kind of level. One can buy with a stop loss 1325. And one more trade, that is from the mid cap and the bottom out stock, Voltas. The stock has been holding the gains from last two trading session after the weakness of last 2 to 3 series. We have seen a consolidation breakout and it has surpassed its 50-day exponential moving average. So some positive price movement led by short covering could be seen in this stock. One can buy with a strict stop loss of 541 and the counter has potential to move towards 577 kind of levels.
All right, Chandan, thanks a lot for joining us. You have a good trading week. But the big story this morning remains the unexpected rate cuts by the GST Council across the board. Abneesh Roy, the Senior Vice President of Edelweiss Securities, joins on the phone line to talk about that. Abneesh, good morning. First, let's talk about paints, where that big cut has come in from 28 to 18%. We were just speaking with a couple of paint companies and they said that they will pass on this entirely in terms of price cuts. But what are you expecting on the stocks, and in terms of volume growth, what do you see?
Yeah, it's a big positive for the sector. Yes, the prices will be passed on, but what will happen is the paint will become more affordable, and that's why a lot of the consumers who are kind of sitting on the sidelines definitely will see this as a cue. Second, we have seen when in soaps also the GST rate cut happened. Next few quarters, the volume growth rate, in fact, picked up. So in paints also, I expect that earlier, if we were expecting, say, 11 to 12%, there could be a 2% higher growth rate possible once the dust settles. So I think there will be acceleration. Market share gain can happen from the unorganized, which is at around 30%. So I do expect that the stocks will read it. We have a buy on Asian Paints and Berger Paints. So we do expect that these stocks should do well, and these companies' results will also definitely accelerate in terms of volume growth.
Okay, because of the GST cut, will you buy PNG?
We don't cover PNG, but yes, it's a big positive from a rate cut point of view. But clearly in PNG, one thing we should watch out is input tax credit may not be available because it becomes GST exempt. So there will be some loss because of that. We have seen that in other sectors also in restaurants.
So any idea net what is the P&L impact?
No, we don't cover it, so we'll not be able to comment. But still, I think on an overall basis, still I think it will be positive.
Okay, Abneesh, good morning. What about something like an ITC? I mean, there's no move on cigarette. You think market will take that positively?
Market will take that as positive because if you remember in February 1 also in the budget nothing happened, and after that 5-6 months have happened and nothing has happened in the meetings of the GST committee. So I think market will get more confidence. The stocks haven't done well in spite of these 4-5 months, no drastic action, no negative action. The results come out this week, so that's something which will be watched out. But I think in terms of valuation, clearly almost 40-50% gap with Unilever. That is something which normally should reverse if the results are good and if the regulatory action is not negative.
Okay, so you said positive on Asian Paints and a couple of other Berger Paints as well is what you're positive on from the paint space. What about footwear? Bata, of course, has double positive, good numbers as well. Would you expect upsides there?
Yeah, I think it's positive for them also because again the affordability improves for the consumer, so pickup in volumes will happen, and again in terms of market share gain from unorganized, that should happen. So we don't cover the footwear sector, but yes, it should be positive from a volume growth perspective. We are also positive on United Spirits. If you see last 2 weeks, that stock had come off significantly because there was an expectation on some part of the street that ENA will also come under the ambit of GST, but that did not happen. We were not expecting, and good part is it did not come. But stocks came out significantly. Today results will come out post-market. So I do expect a decent set of numbers. So I think that's one more stock I would recommend investors to buy, because we do expect re-rating. FY19 is likely to be a strong year.